All right, today I'm going to share the secret of my financial success, my greatest financial weapon, and it is a lightsaber. Anyway, I have too much fun doing this. No, there is something that you probably don't know about that really has to do with going from one asset class to another. If you're a one-trick pony when it comes to your investments, you only do multifamily, you only buy gold, you only do oil and gas, you're really missing out on this incredible opportunity to be able to go from one asset to another when it makes sense for you. So I think this is super compelling. You're going to love it. We got 3 great points, an awesome quote for you at the end. So stick around. I'm going to share. This is an incredible secret. You don't want to miss it. All right, so quick disclaimer, I'm not an investment advisor anymore. I'm not your investment advisor. These are just my opinions. Seek your own professional advice. I want to share this with you. This comes from The Hidden Secrets of Money, which is a guy named Mike Maloney who does a lot of stuff in precious metals, educating. If you haven't watched this series, it's an incredible series. I recommend everybody watch it, especially if you can send it to friends that don't know a lot about financial education. This is a great video. So I'm going to give you a framework here, okay? This is the framework I'm going to give you. I'm going to share this story with you, which I think is really awesome. So let's jump in. You can take a look at this image here. The left side, you'll see 1920s. You'll see that a house is worth $3,000 or it's worth 150 ounces of gold, right? So that basically, you have the option. Do you want to sit in cash? Do you want to buy houses, single family houses? Now we do multifamily, similar to this stuff. We do a lot of alternative assets, but if you want to buy houses, that's what you could do. And also, how much in physical precious metals could you own? And we do own physical metals. We think physical metals are awesome, precious metals. So in this case, you would have bought 150 ounces of gold in 1920, right? So for $3,000, that's what you would have bought. They were $20 an ounce, you would have bought it. In 1930, you can see a little bit to the right, that 150 ounces of gold, so instead of a house costing 150 ounces of gold, it was only 60 ounces of gold. Well, why is that? It's because the price of gold went up and the price of housing went down. We're talking about the Great Depression, right? So housing was cheaper, but they really wanted gold, right? So if you were able to take advantage of this, and again, this is theoretical, so I obviously wasn't even alive, and you probably weren't either, but if you were able to do that, you were able to buy then, instead of the one house 10 years earlier, or 10, 15 years earlier, you would have bought 2.5 houses in 1930. We'll look over to the right to 1970, okay? So this is 40 years later, quite a bit later. Your 2.5 houses now, instead of being worth $2,000 each, they're worth $30,000 each, and you've got 2.5, so you've got 2 plus a little 0.5, maybe a small little house or something, and you were able to sell that because now one house was now valued at 850 ounces. Well, why is that? It's because the price of gold was low compared to how much housing had come up. Housing had gone up basically 15x over those 40 years, but gold had really stayed the same price. So you had taken your 2.5 houses, you sold them at that point, you had 850 ounces per house, that would be 2,125 ounces of gold, right? That's a lot of gold. So again, you just, 50 years, years earlier, you would have had 150 ounces. Now you've got over 10 times to 15 times that amount that you're able to hold. So then you fast forward 10 more years to 1980, right? So you go to 1980, 10 years later. Now you're 25 ounces of gold. A house is only, instead of worth 850 ounces, for 70 ounces of gold, you can buy a house. Well, why is that? The price of gold went way up. And also housing was, $60,000. It wasn't $30,000, but it wasn't that much more expensive. So you were able to then take the 2,125 ounces of gold and you were able to buy 30 houses, right? So you can see these moves are big if you're able to move into the right asset class at the right time. Now in the year 2000, so 20 years later, you're able to take those 30 houses. A house is now worth $200,000 each, as you can see there. You're able to sell all those. And now you're able to buy 24,000 ounces of gold, because it's 800 ounces per house that you own is kind of what you will end up with. Now, this is not counting in taxes and other things, but let's say you're able to do it, 24,000 ounces in the year 2000. Now, the last part of this is in 2011. This is kind of where this ends. Obviously, we could kind of advance this. This is kind of as far as the video went that Mike did. And you take those 24,000 ounces. Now, a house, instead of 800 ounces per house, it's only 150 ounces of gold per house, because again, gold has come up. Housing, we were in a time where housing was not as expensive. And you're able to take that, you're able to take those 24,000 ounces and buy 160 houses. Now, I'm not a big, we do multifamily everything, but you can imagine this doesn't even include leverage. We're not even including leverage. It's just buying cash, paying cash for houses, which we don't necessarily recommend. But the illustration is amazing, right? Because you're able to take one asset and move to another asset that makes more sense. So the question really comes from this is, obviously no one could have done that perfectly. That was, $1,000,000% return, whatever, and just at the right time. But there's times where it makes sense to buy an asset, and there's times where it makes sense to sell an asset class, right? Right now, it's hard to do multifamily deals. We love the deals we're in. They're going well. They're excited. We own a lot of precious metals. We own other assets. But we're always looking, one thing I'm always looking at is relative valuations. And so how do you value an asset class? And really what you can do, one way to do it is to look at historical valuations. You can see on this chart here, this is a price earnings ratio. This has to do with how much you're paying for every dollar of earnings you're getting in a stock. So if a stock's $100 and it has a price earnings or PE ratio of 10, it means you're paying $10, you're getting $10 of earnings for every $100 you're spending, right? So it gives you basically that percentage per year. Now, if some of these stocks are hundreds in the hundreds amount, or they don't have any earnings at all, it's a little harder to value stuff. But you can see historically in 1929 that was very, very high. They had a crash after that. We've had some recent times that were very, very high as well. And so it's important to look and see, the best times to buy are when people are not they're not excited about it. And it really comes down to this idea of being a contrarian investor. What does that mean? It means that are you just like a stick in the mud, and you're working against other people and not really trying to help them, and you're just being really kind of a thorn in their side? No, you're not being a difficult person. You're using your mind and you're thinking independently about, does this really make sense? And my friend Jason Hartman uses this saying. He says, well, when you look at investing, he said, well, compared to what, right? If you get a return, well, what does that compare to over here? Or the valuation over here, how does that compare to what you would get if you bought this asset? So that's something I think that is really important that a lot of people don't talk about, the ability to move from one asset class to another. Now, at Bronson Equity, we're doing multiple asset classes. We're doing ATM machines. We obviously have our real estate, $200 million in real estate. We've got car washes. We've got an oil and gas deal. We've done other things in different spaces because we're always looking to find the best opportunity that makes sense. That's something I encourage you to do. Obviously, be educated, look at other things. But the thing you really can do that will help you in this is learn about other asset classes, right? Learn about them. Learn about things that are not in your wheelhouse. Talk to other investors. Listen, listen to the webinar presentations for different types of deals. Ask around. Go to events. Try to find out about unique things. I was at an event recently and found out about a guy doing timber somewhere over in Texas, and I was like, that sounds awesome. Let's do a webinar. Let's do a podcast on it. I want to learn more about that, because the more that you can learn about different assets, it will give you more tools. It is like a lightsaber in your tool belt that you can use. Hopefully you have a green saber and not a red saber, right? You're not a Sith Lord, you're a good guy. So do the work, read, talk to other investors, sell things when they make sense. Sometimes it makes sense to sell something and not hold it forever. If things are going crazy, everything is for sale or should be for sale in your portfolio at the right price. And you'll see it happen. Sometimes there'll be a time when the stock market's booming and companies that aren't for sale get sold. Well, why is that? Because somebody paid just an incredible earning, multiple for it, right? Mark Cuban sold broadcast.com, I believe for I can't remember, billions of dollars at a time to AOL, when it just was like stupid prices, and he's like, oh, I'll sell it, whatever, and that's how he became a billionaire, right? He was able to sell at a time that was just like, okay, he's taking advantage of those swings. So conclusion is, learn from other people, find what assets make sense for you, never stop learning and growing. It will really help you along the way. I want to share this quote with you from John Templeton, who started the Templeton Fund, super successful investor, and he said this. He said, the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. So, it's the Warren Buffett saying, be fearful when others are greedy and be greedy when others are fearful. So don't be afraid to think independently, to do things differently. We're buying stuff that we feel like, okay, they're really not in favor of things now, but if things go the way we think we're going to go or could go, they could be really, really attractive just based on historical valuations. So I want to share this video with you, which is the 2023 multifamily or 2023 investing risks about not losing money. So check it out up here. It'd be helpful for you, for your investments. Check out that video. And then if you haven't joined our investment club, there's a link below. You're going to love it. You're not hearing about our awesome deals in oil and gas and in ATMs and car washes. And we're just finding all sorts of amazing deals in and outside of real estate that you'd be interested in. So if you like this video, make a comment on what you like. We're going to create more videos. And if you put a comment in here about what topic you want me to talk about, we're going to make a drawing for a $100 Amazon gift card. I'm also going to feature you on this channel. So stick a comment below. It would really help us out. Smash that like button, and then hopefully you'll be winning that gift card when we'll be talking about you on this show. Thanks so much for educating yourself. Look forward to seeing you on the next video.